Hey everybody, this is Jim at sp500chart.com. It's about 5:30 on Sunday early evening, July 5th, 2020. We're going to take a look at the week that the week ended on Friday was the 4th, but it was a short week, so we ended trading on July 3rd, so we got 4 days to look at. And before we do that, let me remind you, as always, the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I remind you, I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out here on a 2-hour view, which we don't look at very often because for some reason freestockcharts.com, when you look at all the lines on a 2-hour view, if you're not careful, they start to get all crazy. So we're looking at it on a 2-hour view, and I've sort of moved a few things around to make it look a little bit more neat. Just a super quick synopsis of what has gone on over the last 4 or 5 months. First thing, obviously, I'll tell you what, I'm back a little bit more. We had been looking at this large inverted head and shoulders pattern here that had broken out. It did give us some evidence that we were going to see a pullback, and that was this rising wedge here. But then, you know what happened, coronavirus, and we went from the 3400s down to 2200 in just a little bit more than a month. That was a huge, that was a 1,200 point swing, well, not swing, because we're not quite back yet, but a 1,200 point drop from 3,400, again, in just a little bit more than a month. That was pretty severe. Then let's go look at things back now on that 2-hour chart. We saw this descending megaphone pattern, if you will, and that means as we got deeper and deeper, things got a little bit more unhinged. That is often the sign of some capitulation. We then identified this line of resistance, and in addition to that, we identified a cup and handle pattern here. And really, what is a cup and handle? It's basically an inverted head and shoulders pattern without a left shoulder. So cup and handle, once we got over this level right here, that's when we decided that, yeah, I think this cup and handle is going to pan out. We should be getting on up to into the 3100s. And remember now, we made that call when we were at about 2650. And lo and behold, that's exactly what we did. So we started moving up to that target level. Then we saw potentially a rising wedge here, coupled with this line. That broke down, but then some interesting things started to happen. Looking at a 2-hour chart now. Never could really get settled on where our line of support was. That's the one thing that I still look at and I go, I don't know. I still don't know where it is. I knew we were headed up, but our support lines were just kind of all over the place. Maybe it's this one. Then we had this one. And I think we had another one there at a point too. But the moral of the story right now is we came up really strongly off that 2200 bottom. There was this kind of sideways consolidation here that took about 4.5 weeks before we started to head up again. And then it looks like another sideways consolidation. Remember, a rising trend line breaks for one of two reasons. And we've seen this many times. It'll either break to reverse, meaning you're getting ready to head down in a significant way, or it breaks because you just can't maintain that rate of increase, so then you go sideways for a little bit. So it's like from here to here, bulls are in control. Well, let's say this. From here to here, this spot right down here at about 2400s up to about 2800 something, bulls in firm control for that 6 or 7 days. Then the bears get involved, and bulls and bears battle it out for about 4 or 5 weeks. Bulls win that battle. We go from 2800 up to over 3200. Then what happens? Bears enter the picture again. Bears and bulls battle it out. And in this particular case, it looks like they battled it out in the form of a symmetrical triangle. That brings us now to last week. Last week, short week, we opened on Monday the 29th. We opened at about 3,000. And we closed the week at 3130. Nice gain, especially considering only 4 days. Additionally, this symmetrical triangle, we've got a touch on resistance, a touch on support, touch on resistance, touch on support. Remember, and that last trip down is sort of in the form of a descending wedge, which we knew meant we should be coming back to about 3150. By Friday, we did exactly that. And we are also at 3130, with that trend line being at 3100, we're just a hair under that 1% margin we like to see for a clear breakout. But I think that's a breakout, especially when you look at the open. And I want to say one thing here. A long weekend after a week, even though a short week, after 4 days of gains, that long weekend was probably makes sense that we saw that late Friday sell-off. So there you see the sell-off. Also, I can't talk. Remember, this line right here is that long ancient history, but the extended neckline from that very large inverted head and shoulders pattern that may yet, excuse me, come into play. Finally, one more thing. We've got a level that appears to be some resistance right here, and that's at around, let's just call it 3150. This could also work out to be, instead of a triangle, you could make the point that this is sort of a, I don't want to call it a double bottom because we're not at a bottom, but sort of a double dip consolidation, if you will. Or, since we've already seen one, maybe this is another cup. This cup just has a big handle. We also noticed this week that this could also be viewed as a very small inverted head and shoulders pattern. And if so, that should, we came close to making that target, didn't we? Let's just see. I hadn't measured that in a while. So there's the depth, there's the breakout. Oh boy, that's so close. Yeah, I'm going to call that done. So this little pattern here, once we made it up to about 3165, I think that little pattern did its thing. But remember, we've got this larger consolidation here, this triangle, and it has a target up at about, let me get the right tool. Come on. Why is this thing not working? I'm choosing my little tool here. There we go. Finally. We have a target up around 33.60. So that's about 230 points higher than we are now. Call that roughly, just eyeballing it, 7 or 8%. That's significant. So I think it was an interesting week. The thing to keep an eye on, I believe, is what happens in relation to this consolidation symmetrical triangle. We'll keep an eye on that this week, and I hope you are a subscriber so you can follow it with me. If not, well, then you can hear about it after the fact, perhaps next weekend. But for right now, I do want to thank you for taking time out of your weekend to watch this. I hope you had a great, if you're in the United States, I hope you had a great 4th of July weekend. And as always, thanks for your very kind support. Take care.